But moving on, the last line here in the statement of cash flows is the net cash flow. This is literally your change in cash. So after everything that has happened in one given year or one given quarter or whatever time period you're looking at, what is the difference in Apple's bank account or Facebook's bank account or whatever company's bank account at the end of the day? That is the net cash flow. So for example, here in 2018, Apple made about $5.6 billion. This is in thousands, so it's $5.6 billion. And then if you take a look at it from one year to the next, their bank balance literally went up by $5.6 billion. And so as you can see, there is a direct correlation between each of these financial statements, starting from the income statement to the statement of cash flows, and then finally to the balance sheet. The balance sheet gives you a snapshot of what the company's current financial position is. How much debt does it have? How much inventory does it have? However, in reality, this is probably the least useful financial statement. The most important ones are almost always the income statement and the statement of cash flows. In the income statement, you want to know how much did the company make, what did it cost, and then in the statement of cash flows, you want to get a sense of how much money did the company spend on future expansion. So those are just some of the questions that you'll answer by looking at the financial statements here. I know that there are a lot of line items here and a lot of numbers on these screens. And I want to just make sure that everyone here understands that you don't need to know every single one of these inside and out. We're going to go through some metrics, some basic formulas where you can divide one number by another and get a sense of how a company's doing. So without going into too much detail, there's a lot of value that someone can extract from this.